As the market ticker flashes around the $3.25 mark, retail investors scrolling through their favorite trading apps are looking at a chart that looks like a slow-motion car crash. Over the past year, Lithium Americas Corp., trading under the ticker LAC on the New York Stock Exchange, has experienced a brutal liquidity squeeze. Standard financial media headlines scream about oversupplied global lithium markets, depressed carbonate spot prices, and the apparent death of the EV transition thesis. YouTube comment sections and Reddit threads are littered with panic, capitulation, and disillusioned retail traders dumping their bags after buying into the green energy hype cycle near its absolute peak. To the untrained eye, the casual observer looking at a depressed valuation and a multi-year downward trajectory, Lithium Americas looks like another casualty of speculative overreach, a capital-burning junior mining venture trapped in a cyclical downturn with no immediate light at the end of the tunnel. But this superficial retail narrative completely misses a monumental structural reality happening beneath the desert floor of northern Nevada. What the mainstream financial noise fails to price in is that Lithium Americas is not merely a speculative play on commodity spot swings, it is becoming a sovereign-level, geostrategically fortified asset designed to anchor the entire North American energy independence framework. While retail investors fixate on short-term commodity price volatility and monthly cash burn statements, institutional heavyweights and sovereign entities are playing an entirely different game. They understand a physics and geopolitical bottleneck that cannot be solved by market sentiment. The United States cannot transition its automotive industrial base or secure its defense supply chains without domestic Tier 1 lithium extraction. The McDermott caldera in Humboldt County, home to the Thacker Pass project, is not just another hole in the ground. It is the largest known lithium resource in the entire United States. When you look past the immediate price noise, you realize that the market is attempting to price a generational, sovereign critical infrastructure asset as if it were a speculative penny stock caught in a commodity bear market. This disconnect between daily retail panic and heavy institutional accumulation creates one of the most fascinating setups in modern market dynamics. Daily trading volumes hover in the millions of shares, driven largely by algorithmic churn, macro-driven headline anxiety about interest rates, and retail traders panic selling into weakness. Yet behind the scenes, a quiet transformation is occurring. While retail accounts are getting mercilessly shaken out during cyclical pullbacks, strategic titans and government institutions are cementing their positions. General Motors didn't commit nearly $1 billion of capital to Thacker Pass for a short-term trade. They did it because their entire vehicle manufacturing roadmap depends on guaranteed domestic supply. Furthermore, the structural involvement of the U.S. government, including strategic equity stakes and restructured Department of Energy loan financing frameworks, signals that Thacker Pass is treated as critical national security infrastructure. Institutional accumulation during these periods of extreme retail despair follows a classic playbook. Absorb the liquid float while public sentiment is at its absolute nadir, locking up future supply long before the asset reaches commercial production and the broader public realizes what they missed. Before we dive deeper into the operational mechanics and how this asset changes the North American landscape, let me pause right here. Are you currently holding shares of LAC through this grueling consolidation, or are you sitting on the sidelines waiting for definitive construction milestones before you make your move? Drop your thoughts in the comments below. To truly understand why Lithium Americas commands such strategic gravity, we must completely strip away outdated historical framing. For years, Wall Street analysts mistakenly categorized junior lithium developers alongside cyclical base metal miners or old economy commodity extractors, whose fortunes rise and fall purely on the whims of short-term industrial demand cycles. But Thacker Pass is structurally different. The project utilizes a sedimentary claystone deposit that requires an integrated, highly engineered chemical processing facility right at the mine site to convert raw lithium-bearing clay into battery-grade lithium carbonate. This is not just a traditional shovel and cart extraction operation. It is an advanced chemical manufacturing plant designed to feed the domestic electric vehicle and energy storage supply chain directly on North American soil. The old narrative viewed lithium companies as high-risk, cash-burning exploration bets, dependent on continuous equity dilution. The modern reality, accelerated by joint venture partnerships with automotive giants and direct government backing, transforms Lithium Americas into a critical infrastructural gatekeeper for the Western world's energy transition. Looking ahead, the multi-year growth catalysts for Lithium Americas are deeply intertwined with structural supply chain localization and aggressive capital expenditure commitments from major automakers who cannot afford to rely entirely on overseas refining hubs. As construction milestones advance towards initial production phases, the company is systematically de-risking its execution path, moving from a pure-play paper asset to an active industrial producer. The technological and engineering roadmap focuses on optimizing commercial-scale production capacity expected to scale significantly over the coming years, positioning the facility to supply tens of thousands of tons of battery-quality lithium carbonate annually. However, this path is not without its operational challenges and risks. Developing a greenfield megamine involves navigating complex regulatory environments, managing multi-year capital expenditure cycles, avoiding execution delays, and mitigating environmental compliance hurdles. Yet when you weigh these execution risks against the reality that mega-cap automotive spenders are legally and operationally tethered to securing domestic supply, the risk-reward profile shifts dramatically. The ultimate takeaway for sophisticated market participants is clear. Short-term price fluctuations and retail sentiment are designed to shake out the impatient. By looking past the immediate noise and focusing on the sovereign-level necessity of domestic critical minerals, you begin to see Lithium Americas not as a volatile ticker symbol, but as an irreplaceable cornerstone of the future industrial economy. Disclaimer: this video is made only for educational and informational purposes. I am not a financial advisor. Any stock, crypto, or investment discussed here is not financial advice. Please do your own research or consult a qualified financial advisor before making any investment decisions. Invest responsibly.